Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So welcome back to the third video in the month of this Mohnish Movember series that we're doing on the channel. As you can see, the Mo is coming along, and crazy story actually. So the other day I was literally just walking through the streets of Hamilton here in New Zealand, and you know when you have that sort of feeling that you can sort of feel that someone's looking at you from out in the distance. So this guy was kind of looking at me from across the road, saw me, and literally like sprinted through lanes of traffic, like dodging cars, and then came up to me and was like, "Hey, are you Mohnish Pabrai?" And I was like, "No, man, it's just the Mo. I know it's a crazy resemblance. It's hard to imagine I'm not, but I promise I'm not Mohnish Pabrai." Okay, maybe that didn't actually happen, but I'm working on the Mo. I'm trying to replicate Mohnish as much as I can. So in terms of today's video, I put a poll up on the YouTube community page a couple of days ago, basically asking you what you want to see in this next Mohnish Movember series. And it was a pretty close race actually between Mohnish Pabrai's best and worst investments and also an overview of Mohnish Pabrai's portfolio. So Mohnish Pabrai's best and worst investments was the winner, so that's what we're going to start with today. And I was sort of doing the research for this last night and putting everything together, and I basically came to the conclusion very quickly that if I did a video of his best investments and his worst investments all together, the video would be massive. So in this video we're just going to focus on the worst investments actually, and next week we'll have a look at the best investments. So that's the plan. If there's any specific stocks that you know Mohnish Pabrai's sort of hit it out of the park with that you want me to talk about, drop that down in the comments below. But this video is all about Mohnish Pabrai's worst investments. Now, Mohnish Pabrai is an investing idol of mine, as many of you know. He's had a great track record of investment returns. Over the long run, he has beaten the market. He's had years when he's beaten the market. He's had years when he's trailed the market. He's had years where he's absolutely spanked the pants off the market and beaten it by a mile. And over his 20+ year investing career, averaged out, he does have a market-beating investment track record. But in amongst there have been lots of mistakes. Mohnish Pabrai tells us all the time that even the best investment analysts are wrong at least 1/3 of the time. And in this video, I want to have a look through two of Mohnish Pabrai's biggest ever investing mistakes. Talk through some of the things of basically what happened, what went wrong, could some of these things have been avoided, and what can we learn for our own investments moving forward from some of the mistakes that Mohnish has made. So before we get into that, I do just want to do a quick update on the Mohnish Movember fundraising. As you know, I have set the target of trying to raise $1,000 for Movember. So I want to give a quick update to that and just show everyone where we stand at the moment. And if you do want to jump straight forward to the sort of Mohnish Pabrai investment mistakes, there will be timestamps right along the bottom of the video. So feel free to jump forward and check that one out if you like. Okay, so since the last video, we have had a few more very kind donations. So we have a $30 donation from MD, who I believe has been a very long time subscriber to the channel, and I think particularly enjoys the Mohnish Pabrai videos. I feel like I get a lot of comments from you if you're watching on the Mohnish videos. We have another $20 donation from Ray. Great cause and enjoy your videos. Another $20 from Anand Kumar. Have enjoyed your YouTube comment and like this initiative as well. Thank you very much. $20 from Matthew. Get those numbers up. Kind of feels like value investing. Money to quality person doing great work. Thank you very much for the kind words. $20 from Henry. Tom, Mo is looking real fresh. $20 from Dion. Great work, Tom. Great value. Get great value from your YouTube content. I appreciate that. We have a massive $100 donation from Scott and Tessa McLaughlin. Great cause, Tom. Well done. And then we have a $30 donation from me. So as you may know, I'm donating all of the ad revenue from these Mohnish Movember videos. So I'll put the analytics up on the screen here. I think we raised or earned about $25 in ad revenue from last week's video. Again, a bit of Swedish rounding. I've pushed that up to $30, and that gives us a total of $780 raised so far. So we're well on the way to that target of 1,000. But like I said last week, we need to keep the momentum going. So if you're interested in donating, the link will be down in the description below, and every dollar helps, and I would really appreciate any donations that you can possibly spare. Okay, so let's get into the first investment mistake from Mohnish Pabrai, and this was in a business by the name of Horsehead Holdings. Now, if you see me looking down around here, this is just me reading notes off my computer, so don't mind me. And this one's interesting because Mohnish Pabrai actually wasn't the only investor that we know of that got burnt in this investment. So there was Mohnish Pabrai, and he lost a lot of money. He actually owned a good chunk of the company, which we'll get into shortly. But actually also Phil Town got burned in this one. He lost a lot of money, and Phil Town actually has a really good podcast episode episode, basically doing a sort of a post-mortem on what happened with his Horsehead Holdings investment. So I'll put the exact name of that podcast episode up on the screen here, but if you're interested in learning more, I would definitely recommend going and checking that one out. It's super interesting on kind of what happened. And the third investor that was in there was actually Guy Spear. So Guy Spear, along with Mohnish and Phil Town, went into this investment, and he was burned and lost a reasonable chunk of money as well. So let's get into what Horsehead Holdings actually did in the first place in terms of their business model, what was the investment case going into it, and then what happened that turned this investment sour for that entire group of great investors. Now, Horsehead Holdings was actually in the business of producing zinc. However, Horsehead had kind of a different approach to doing this. So rather than actually going out and mining zinc, basically they were taking waste materials from steel production, from electric arc furnace steel production, which any GraphTech investors will probably be familiar with, or anyone that's watched my GraphTech videos. They basically took this waste product from electric arc furnace steel production, and the steel companies would actually pay Horsehead to get rid of this kind of toxic dust that they were using, and then they would basically take this dust and convert it into a low-grade sort of slurry that was about 60% zinc, a slurry called Wales oxide. And initially that was Horsehead's business model. They basically sold this low-grade zinc, they sold it as a commodity, and that was kind of what they did. Now, when Mohnish Pabrai and some of these other investors started to get involved, basically what Horsehead were doing were they were looking at building this new plant and would actually allow them to become one of the lowest cost producers of zinc on the planet. So here were some of the numbers and some of the projections when Horsehead was going about building this new plant in Mooresboro, North Carolina. So at the time, the company was producing about $30 to $40 million a year in EBITDA, earnings before interest, tax, depreciation, and amortization. And at that time, they were expecting, when this new plant comes online, to add an additional $90 to $110 million in EBITDA. So if you add together the 30 to 40 plus the 90 to 110, you're looking at close to a 4x in EBITDA earnings from the company once that plant is sort of up and running. And that was really a huge crux of this investment thesis. They needed this plant to come online, and once it did, the numbers looked very, very attractive from an investment return kind of perspective. So typically these sort of companies were valued at kind of 8 to 10 times that EBITDA. So if we add the earnings from the new plant to the existing earnings, we could quite easily see a business that was worth something like $1 billion. Now that comes out to about $20 a share, and at the time Horsehead was trading, in the years kind of leading up to this, anywhere from kind of $8 to about $15 per share. So if you're able to get a cost basis of say 10, and then they executed on this plan and the stock then went to 20, you could get a double from kind of that investment. And the other thing that was sort of this, I guess, free lottery ticket, as Mohnish would call it, sort of built into this investment case, was that the business could well be worth a lot more if zinc prices increase. It was quite sort of levered to the price of zinc. And zinc at that time was at sort of a cyclical low. They were getting very close. Zinc prices were getting very close to a price where many zinc producers would not be profitable. So it was pretty reasonable to expect that zinc prices could actually go up over the following years, and the business could actually be worth a lot more than that $20 a share. It could quite reasonably be worth as much as $40 a share if zinc prices sort of returned to a normal kind of level once this new plant in Mooresboro came online. So here's what happened. Basically, in June of 2013, Mohnish Pabrai filed a 13G. Now, 13G is a filing that an investor has to make when they buy up a large chunk of a company. So they have to file this basically within, I think, about 2 weeks it is of buying the shares. Unlike a 13F, which just kind of comes out each quarter, if they buy a big enough stake in a company, they have to report that to the SEC and to the public much more quickly. So a 13G is filed in June 2013. Mohnish buys about 4.5 million shares, and it's a little bit hard for me to gauge the price at that time. So there's articles that suggest he paid about $7 per share. Looking through the actual price history of the stock, that date seems to line up more with about $12 a share, but it's somewhere in that range of kind of 7 to 12 that he's buying these shares at. Now, a little bit later, so if we fast forward from June 2013 to February 2014, he actually adds to this position. So he adds an additional 1.8 million shares, and by my estimate, he's paying about $16 a share for those additional shares that he's purchased. So at that point, he now owns quite a substantial chunk of the company. So if we combine those two purchases, he now owns over 12% of the entire Horsehead Holdings business. And for a time, Mohnish Pabrai actually had quite a substantial gain on that stock. So he was buying shares anywhere from sort of $7 to maybe 15 or 16. Roughly, that's kind of where I think the price was, looking back at historic charts and that sort of thing. And basically, the stock went to north of $20. And actually, at this time, Phil Town actually liquidated many of his shares. And Phil Town actually went on, after the stock came down, to purchase back into Horsehead Holdings and eventually got his cost basis all the way down to like $3 per share when things started really going south. So let's talk about what happened there. So remembering that Mohnish bought those additional shares in February 2014, basically in late 2015, so about a year and a half, close to 2 years later, the company starts having issues with building this new plant, and they also start to have a few what seemed like minor issues with debt, which turned into potentially much larger issues than they probably should have. So essentially, the company fails to make an interest payment of about $1.5 million when they're starting to have some issues with manufacturing the plant. And keep in mind that at this time, Horsehead Holdings had a total of around $440 million of debt, close to $500 million in debt, and they failed to make a $1.5 million interest payment, and none of that debt was actually ready to come due. They didn't have any large debt payments coming up other than just kind of paying the interest on it for a couple of years. So what happens is basically they fail to make this $1.5 million interest payment, and then that particular lender, which owned not all of the debt, but about $30 million worth of debt, basically called the entire loan. So they said, if Horsehead can't pay this, we just want our whole $30 million back now. And that basically turned the company very south very fast. So management essentially, when they got this $30 million debt call, saw no other option than to just bankrupt the company. They filed for a Chapter 11 bankruptcy, and this turned a lot of shareholders very, very angry. So Horsehead is sitting here with $440 million in debt. 30 million of that gets called, and they see no other option than to file for bankruptcy. So all these shareholders are sitting there, you know, Mohnish has put tens of millions of dollars into this company, and they're kind of sitting there saying, why didn't you just come to us and we would have lent you $30 million, or we could have rolled the debt over into some other lender, or we could have done something. Chapter 11 was definitely not the best option for shareholders at that point in time, but that's what the Horsehead management went ahead and did. So as this starts to happen, the stock falls all the way from $20 a share. They start having troubles with the plant, goes down to 12, then it goes down to less than 10, then 5, then 3, and all this time actually Phil Town is starting to sort of average down his cost basis again as he gets back in. And then eventually, out of the blue, they file for bankruptcy. There is no pre-warning. The debt was growing, but it didn't seem like it should be a big enough issue to force them to go bankrupt. And all of a sudden, by January 2016, Pabrai is selling all of his shares at approximately 28 cents per share. So he locked in more than a 95% loss on the stock, basically a zero. It wasn't quite, but he lost almost everything that he put into that company. And there were several court proceedings going on after this. And this is something that Phil Town actually talked about on his podcast. He basically said that, the judge basically agreed that there was more than enough equity still in the business for shareholders to potentially get something back. There's no way that the management should have filed for bankruptcy at that time. But essentially what happened is that at the beginning of the court proceedings, they put together what's called an equity committee. And an equity committee is basically where these people go out and investigate how much equity is still in the business, whether there's something they can potentially return to shareholders, and it's structured in a way where the shareholders that are suing the company actually don't have to pay any legal fees. All of the legal fees are sort of paid for by the actual company itself, by Horsehead. And basically what happened is that all of the equity was eventually wiped out by legal fees. It was adding literally like over $100 million in legal fees were added during the course of this proceeding. And eventually after that process, there was just no equity left. And Pabrai was probably right to sell at 28 cents because the rest of them got zero. And the even crazier part is that eventually this Mooresboro, North Carolina plant got up and running and was doing exactly what it was meant to do. So here you have a situation where Pabrai was probably right on the business, he was probably right on the valuation, and although debt continued to accumulate over a period of time, he basically got screwed by the management. So if you ever needed a lesson in why you should pay attention to the management team of the company, Horsehead Holdings is absolutely it. So that is the first investment mistake from Mohnish Pabrai, and frankly it probably wasn't a mistake other than not paying enough attention to the management and the management just doing things that weren't in the interest of shareholders. So no matter how much research you do, even if you're right on the business, sometimes these things can just turn south. So that was the first one. The second one we're going to talk about is a business called Delta Financial. Now in the case of Horsehead, Mohnish Pabrai lost like 90+%, sold at 28 cents per share after buying it 7 to 15, probably somewhere in that range. Delta Financial was literally a zero. He got nothing at all back from this investment. So let's talk through what happened. Basically, Delta Financial was a subprime mortgage lender. They provided mortgages to people with sort of below average credit scores, or maybe they didn't have the right documentation in order to get, you know, a typical loan from a big bank at a low interest rate. So they kind of operated in that space, and as a result they were able to charge higher interest rates than many traditional banks and many sort of loans for people with high credit scores in order to kind of justify and account for the extra risk that they were taking by taking on sort of lower quality borrowers. So that was kind of the business of Delta Financial. Pabrai owned a huge chunk of it. So he, at the time that Delta Financial went bankrupt, owned 28% of the company, owned a big chunk of it. And here's basically the investment case. So it's a really good example actually of how sometimes even what looks like a big margin of safety cannot protect you. So let's talk through what the investment thesis is and what kind of happened. And I should say many of the numbers I've gotten here are actually from Value Investors Club, which is a fantastic resource if you're not part of that already. And it's really interesting to actually go back and read some of the old write-ups of investments that just haven't worked. So this was a post that someone put up in 2006 about Delta Financial before everything sort of turned south. So that's where I'm getting a lot of these numbers from. Now, the investment thesis was basically this. So Delta Financial shares were trading at about $9.70 per share. They had earnings of about $1.50. So if you look at it simply like that, they were trading at a very low multiple to earnings. They were trading at sort of 6 or 7 times earnings. Now, one of the interesting things that was also present with Delta Financial, though, is they had a lot of excess capital. They had cash and other things kind of in the business. So let's look at it a little bit more like that. So if you include the excess capital, that was about $9.50 per share. So that includes cash, and basically the loan book at that time was probably worth combined about $9.50 per share. So then if you look at $9.70 was the price, you've got excess capital of $9.50, you're basically only paying $20 per share for a business that earns $1.50 a year. So this is, you know, Pabrai's classic sort of PE of 1. This was actually a PE of 0.1 if you include some of that excess capital. So it looked extremely cheap, and Mohnish Pabrai sunk a huge amount of money into the business. He bought up 28% of it. And here's what happened. So as many of you will know, particularly if you've watched The Big Short, if you haven't, definitely go check that out. In 2007, the subprime mortgage crisis happened. So the housing bubble popped, and you have this business of Delta Financial. Now, even though Delta had a lot of this excess capital and so on, and it looked like he had a massive margin of safety, basically Delta was an extremely highly levered business, which basically means that a lot of things have to go right in order for Delta to make money, and if all those things do go right, they'll make a lot of money. But if things go south even a little bit, Delta can go from making really good kind of supernormal returns down to losing a lot of money very, very quickly. So in 2006, the business earned about $35 million during that year. Basically what happened in the third quarter of 2007, when this housing bubble popped and we had the subprime mortgage crisis, is they went from earning $35 million a year to losing $39.6 million in one quarter. So massive swing in profitability to the downside, and there was basically nothing the business could do. So they laid off 400 staff, they filed for Chapter 11 bankruptcy, the stock fell 82% in a day on the day that 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 bankruptcy was filed, and Pabrai essentially just lost everything. And what I find really interesting actually is Mohnish Pabrai's perspective on this Delta Financial investment, because he has actually come out and spoken about it publicly a couple of times. So this is what he mentioned in a Forbes interview. So Pabrai said, well, Delta Financial was a full loss for the firm, for the fund. We lost 100% of our investment. It was a company that went bankrupt, and we learned a lot of lessons from Delta. And one of the lessons was that Delta was in many ways a very highly levered company, and they were very dependent on a functioning securitization market. And when that market shut down, they were pretty much out of business, and they were caught flat-footed. So there's a number of lessons I've obviously learned from Delta. It's easier to learn lessons when you don't take hits in your own portfolio, but when you take hits in your own portfolio, those lessons stay with you for a long time. And then in another interview by Smart Money, this is what Pabrai had to say about Delta Financial. So the question from Smart Money was, how do you deal with a Delta Financial both professionally and personally? And Pabrai said this: investing is a game of probability. Sometimes you make favorable bets, you still lose them. Even a blue chip could go to zero tomorrow. With Delta Financial, the company didn't have enough financial strength. That was probably a mistake on my part. I think of it as a favorable starting blackjack hand where unfavorable cards showed up afterwards. And then Smart Money went on to ask, if you could do it over, would you have done the same thing? And Pabrai said, it was a good bet. So here you have Pabrai definitely learning from these mistakes, but not learning too much. He was open in saying that investing is certainly a game of probabilities, and sometimes things just don't work out. Even if the odds look as though they are heavily stacked in your favor, things can come out of left field and they can just destroy an investment out from underneath you. So here are a few of the things that I have learned from these two investing mistakes from Mohnish Pabrai. Basically, even the best investors make mistakes, and investing is a game of probabilities. Now, there are certainly some things that we can look out for in order to minimize mistakes, and in the case of both Horsehead and Delta Financial, that includes leverage. Now, it is hard for a company to go bankrupt if they maintain steady profitability and they have very little leverage. So leverage can certainly get you into trouble. And the other lesson that we have from Horsehead is that management teams can absolutely destroy an investment as well. So the closer you can look into management and the more that you can understand their incentives, the better that's going to be. If those management teams have a high ownership in the stock of the company, that's probably a pretty good incentive for them to do things in the interest of shareholders. Whereas if they are very highly paid just on maybe options, or they purely just get a salary, or they have basically no incentive for the actual business to do really, really well, that is a place where you can get into a position that things just turn out very, very poorly, very, very quickly, and they can just make stupid decisions for shareholders. But mistakes are par for the course. The best investors in the world make them, and over an extended period of time, we have to make sure that our winners outweigh our losers, and that's why next week we're going to be talking about Mohnish Pabrai's best investments and some of the success stories he's had as well. So I hope you did enjoy the video. If you did, please hit like and hit subscribe. If you're interested in contributing to the Mohnish Movember sort of fundraising towards mental health and suicide prevention, that will be linked down in the description below. Every dollar helps, and the support from you would be very much appreciated. Even if you don't want to support directly financially, even hitting like or share on this video will push it to a wider audience, increase the ad revenue, and that means I can donate more towards the cause as well. So that's all from me today, and I will see you in the next one. Cheers. Mo check.